Let's now introduce on the show Amit Kukreja, the founder of Amit Kukreja Advisory. Amit, thank you so much for joining us today on ET. Now, we have been saying on the Money Show since the beginning of this year that while in 2020, if you had been bold enough to take some risks, you would have made money. I guess in 2021, it's important that you have your investment portfolio spread across different asset classes. And we've spoken about foreign investing, we've spoken about corporate bonds. Now we want to talk about REITs. And this is coming at a time when we've seen a massive surge by mutual fund investments in REITs. It's coming at a time when we have another IPO for a REIT already ongoing. So tell us, what's your opinion on an asset class like a REIT? Do you think it's a good addition in a retail investor's portfolio? Especially, do you think it serves as a good diversifier?
So thank you, Mubina, for having me on the show, first of all. Second, pandemic situation has clearly taught us the significance of having diversification in our portfolio. If you look at the stats of last 10 years, gold has been the winner for 3 years, equity has been the winner for 3 years, fixed income for another 2 years, and then international equity for 2 years. Now, if you look at this, clearly financial assets are ruling the charts of being the highest ROI provider in your investments portfolio. Real estate as a tangible asset class has not done that well, particularly in the last 10-year period. However, REITs being the conversion or converted form of real estate into financial assets creates huge opportunities for people to invest in real estate, commercial real estate particularly, and the infrastructure story. So one of the good asset classes for your diversification of your portfolio, it definitely plays a role. However, I do have some reservations about when to add them, and we will talk about it as we progress through the show.
All right. So do you think that a REIT is a good way? I mean, when we talk about the assets that one should have in their portfolio, we say equities, we say gold, we say debt funds. Do you think that a chunk of realty as well, which is essentially what REITs does represent, is a good addition to the portfolio? What role do you think it plays in the portfolio?
So definitely a real estate allocation in your portfolio plays a role of inflation beating returns. Right? It also plays this role of taking advantage of your growth story. Now, India as a country has a fantastic growth story. So infrastructure investments and investments in the commercial real estate, particularly the business side of the real estate, will be a wonderful diversification element in your portfolio. However, we need to watch out for 2-3 things. One, performance of REIT is a window of only last 3 years. So I would still say it's early days for REITs, for retail investor. It definitely plays a good role probably for HNI investor who has already taken care of his important financial goals of the family. But for a retail investor, it may not be a starting point yet, particularly from the minimum investment amount size and also in terms of performance history. Second, I feel that real estate as an asset class has to play much stronger role as an investments element in the individual's portfolio. Third, I think the income that you earn through REIT has still some gray areas. You get dividend, which has a different tax structure. You get interest income with your investments in a REIT fund, which is a different tax structure. And sometimes there is a payback via the amortization of the SPV that the investor receives. And this payback is the payback of your principal. So how do you categorize the money which is coming back to you as money earned on your investment and money received as a payback? And then what is the tax treatment of all three monies that you're receiving? These are some important aspects which need to get ironed out as time progresses. So I would say for a retail investor, watch out, wait for some more data, let this product evolve, let it go through its maturity curve and come at par with the other low-cost financial asset investments. But for an HNI, if they really want to have an early adoption advantage, which is a high-risk, high-reward game, this might be a suitable investment for them.
We'll take a break.
Okay. Okay. All right. Amit, I think the one enticing part about a REIT is the rules that ask it to share a portion of its income with the shareholders, which essentially does provide a source of frequent income for REIT holders. What do you make of that? I mean, in fact, we get a lot of questions as well that this REIT is offering me XYZ yield, which you sometimes don't even imagine, in a real estate property. So what do you think of that? Do you think that would add as a tempting proposition for retail investors?
So we need to understand first, the real estate that a REIT invests in is mostly commercial real estate, right? Which means a ready property which is giving you yields. Now, a ready property giving yields through rental income will be converted into income for the investor, right? So if you are looking for a ready dividend option as an investment, then REIT plays a good role in it. What I repeatedly say to my clients and to my investor friends is that watch out for the tax treatment. It is not giving you tax efficiency like a debt fund, where if you do not receive money, you have the positive story of indexation playing a strong role for you. Here, since it's a payout option, you are constantly receiving the money. There is a tax treatment going on it. So post-tax return will do a wonderful assessment framework to decide whether you should invest in it. So what keeps me attracted to REIT now is probably the capital appreciation. Because I have a strong infrastructure deployment or infrastructure build-up story for this country, I may achieve a massive capital appreciation in the next 5 years when our economy becomes a $5 trillion economy. At that time, I may achieve fantastic capital gains, which may completely take my yield story. The yield story might become the icing on the cake if that happens. So we need to watch out for how this whole investment space is shaping up, and what is the post-tax treatment, or what is the post-tax return that I'm making from this investment. I hope I answered your question, Mubina.
Even if you will buy a REIT, it would be more so for the opportunity that exists when India achieves its $5 trillion economy target that it's kept for herself. That sort of, does give you conviction of the kind of promise that REIT may offer on the capital appreciation front, and any dividend or any yield is just essentially a cherry on the top. So if you want to invest in a REIT, and by the way, Amit believes that for retail investors, it's not a good starting point. It's a good starting point for HNI, rather it's a good option for HNIs. He believes that a REIT should not be looked at from the point of view that, okay, you're getting dividends, because it's not a very tax efficient option. It should more so be looked at from the point of view of the capital appreciation opportunity. You know what, we'll take a very short break right here on the show. Amit, request you to stay on with us. We've got a couple of questions and queries as well on this theme, so we'll be touching base with our viewers after this break.